Yesterday, QuickBit released their Q1 report. The report was a fine-looking one, and initially the stock price went up by some 20%. After that began a steady decline, and the stock finally closed at minus 12%. Here are my thoughts on that. First of all, I'm not too surprised. By no means do I like it, but I'm not worried either. This is just the nature of the market. It's designed to punish as many traders as possible at any given time. For prices are like a stubborn cat. Once it realizes what you want it to do, it will not do it. Then, when you're not prepared, it may strike. In this case, we all knew it in advance that the report would be a good one. This is a concept I will discuss in full in episode 5, where I will use the Swedish shooting star of 2015 fingerprint cards as my example. That is not the next episode, by the way, but the one after that, as I will not count my TA videos. Now to the technicals. First of all, the data available is limited, which limits the precision of an analysis. But this doesn't mean that it doesn't contain valuable clues, for it does. To begin with, I see a full mini-market cycle. It's got a markup with a 1, 2, 3, 4, 5 Elliott count, and we have a distribution phase which is preceded by an exponential growth of 250% in 1 month, plus a huge sell-off candle that is twice the size of any candle prior to it during the markup. I'm not going to count the launch date for obvious reasons. It's rather an exception. Apart from that, both the parabolic uptrend and the huge sell-off volume, especially together, are textbook distribution characteristics. If you learn to spot these as they happen in any asset, you will automatically have a major advantage. The problem is that we tend to be too easily caught up in the frenzy, especially when we're emotionally biased towards our investment. Then we have the markdown with a steady decline and with an ABC correction. This is followed by an accumulation phase with a first big buying candle, after which it hovers sideways with poor trading volumes, which is all typical for this stage. People are overall discouraged at the moment. In this case, many investors feel disappointed that the company valuation is continuously pushed down by the market. And that's when we are ready for a new markup. I'm not saying it's going to happen soon, because there's still a lot of frenzy going on. We also have continuously higher bottoms. This is a strong sign. But contrary to what many people may believe, this is not a signal per se, but mainly an indication that things are heading in the right direction. I would say we're trading in an ascending channel. One of the technical mistakes that has cost me the most money personally is making buying and selling decisions based on diagonal support and resistant lines, such as this one. These should really be taken with a big grain of salt, as they often need to be redrawn based on new candles changing the picture altogether. For you'd be surprised at how often you may end up redrawing one single diagonal line. So in essence, what you end up doing is that you base trading decisions on a lot of disinformation and noise. I'm sure you've done this yourself. This is a very common mistake to make, and one that way too many traders do, and which is one of the main reasons why a lot of traders lose money long term. Moving on, the EMA 20 and 50 all point upwards. And also, usually I use the EMA 200, but as we don't have enough data for neither that or the EMA 100, the closest I could get was the EMA 90, just to see what the longer trend is showing, and it's showing upward movements, as you can see. This, of course, will show less noise and more real data, the more info we get in the future, more technical data. We have two strong horizontal support levels. These are the ones that matter, the horizontal ones. One is backed up by the EMA 50, which makes it stronger. This is also where we closed yesterday. If we were to break beneath this support, which I find fairly unlikely at the moment, but it can still happen, the next support levels are at 1220 and 1050 respectively. Note, though, that these are approximate numbers, especially when there is such little data available. If 1050 breaks, however, that's technically very bad news. Although fundamentally, if no hurtful news come out to justify such low levels, it could still be a strong long-term buying opportunity. The RSI is in a bullish trading range. Constanza M. Brown talks about this in the book Technical Analysis for the Trading Professional. I'll get more into that in some future episode, but for now, the RSI used right is one of the strongest technical indicators in my opinion. The problem is that few people know how to use it. They tend to think that it's all about over 30 is overbought and under 30 is oversold, and that's it. That's like thinking that all you need to fly an airplane is a yoke to turn sideways and up and down. To sum it up, all things I've gone through show technical strength, but I still wouldn't be surprised if we were to see some sideways movements for some while to come. People are still a bit too enthusiastic. The market needs to cool off, and QuickBit lovers need to get a bit discouraged before the price is ready to truly take off upwards. Although within a few months, I'd be rather surprised if we were not to break upwards, at least to test the previous highs at around 20 kronas. I will talk about profit target levels in the near future, as they're not static but rather based on when we reach them. For timing is everything. I have two things I look for when I determine my sell-off levels. You'll learn about them later on. The only major downside at the moment is the heavy selling volumes of yesterday. Technically, we just have to see what happens in the upcoming couple of weeks before we can determine whether the overall strength is persistent or not. I hope this technical analysis helped you get any wiser. If you have any comments or questions, please leave them below. And as this is an international channel, please write in English. I wish you all a nice weekend.